you have a big disconnect where market capitalization shot up way faster than cost basis, you're more at risk. Say pre-2020, the correlation between Bitcoin and equities was lower. Then it became higher. Now, a lot of that happened because liquidity became a much bigger factor. So when we're doing like major fiscal and monetary liquidity bazookas, the correlation of a lot of things goes up. And so that's kind of been like an artifact of that. But then certainly, yes, of course, once we get the spot Bitcoin ETFs that we had, and then now we get these other aspects going on, more integration between Bitcoin and the financial system. That can certainly increase correlation. We also, I partnered with Sam Callahan, and we released a research report on the correlation between Bitcoin and liquidity. And we also compared other asset classes to liquidity. And at least the way we measured liquidity, Bitcoin had the highest correlation with liquidity compared to stocks, compared to gold, compared to bonds. And I think there's a couple of reasons for that. One is it's so risk-on assets generally have higher positive correlation with liquidity. So that's stocks, for example, whereas gold's more mixed because sometimes it's risk on, sometimes it's risk off, but it's got a little bit of a different dynamic there. It's not a pure risk on asset. Bitcoin's interesting because like gold, it doesn't have earnings, but like equities, it's still treated like a risk on asset. And so in some ways, it's a more pure liquidity barometer or liquidity correlate than any other asset class of similar size. And so that's my general view, is that it's probably going to continue to be pretty heavily correlated with liquidity, with the exception of major headline risks. So the United States buys 500,000 coins. I mean, that's going to override liquidity for a period of time, kind of like how the election was really positive for price for a number of months, even though liquidity was not really great. Because when you have a major like administration change and major favorable shift toward Bitcoin, that can override that liquidity correlation for a period of time. So in general, I expect it to continue to be pretty correlated with liquidity as a base case. So if someone has a view on liquidity over, say, a 6 or 12-month period, Bitcoin is potentially one of the ways to express it. And there's other kind of industry-specific variables that you can go to. Like a lot of my research kind of focuses on that because I'm kind of tied into that space. So yeah, I think there's be more and more kind of integration in that sense. In addition, it's one of the it's like the most liquid asset on like a weekend, or one of it trades 24/7. So a lot of times people use it as like a weekend sell signal if they want to de-risk their portfolios due to something over the weekend. I think cycles are probably going to look a little different. I think people assume that the 4-year cycle is like built into law. I think as Bitcoin integrates more with the system and becomes larger, I think those cycles could change in structure. And it's certainly the case that it could peak for a year or so, but that might be different than peaking for like a 2 to 3 year period. And this goes back to the other metrics I look at. Like, for example, there are on-chain indicators and other metrics of euphoria that you can kind of measure in the Bitcoin space. And one of my favorites is market cap compared to realized cap. And realized cap is basically just on-chain average cost basis. So like, what is the price of the network, except instead of using the current Bitcoin price for every coin, you look at every coin and price it the last time it moved, which is generally a lot of that volume is when people send it to exchanges or brought it from exchanges, which is a pretty psychologically important price level. And the point of all that rambling is that when you have a big disconnect where market capitalization shot up way faster than cost basis, you're more at risk. It's a sign of euphoria, and the prices that we're seeing might not be, say, quote unquote, real, because they haven't really been like liquid and realized for a long enough period of time. And what I would say is that this cycle hasn't reached anywhere near the levels of euphoria based on that metric or similar metrics than the prior major like multi-year cycle tops. But for example, in like say March 2024, it reached like a moderate level, and we did get like a 7-month consolidation, and then it reached kind of similar levels back in say November 2024 when it broke out and kind of touched 100K for the first time. So certainly these like mid-level euphoria periods could give us 6-12 months of consolidation. I would just classify that a little bit different than what we've seen in like major tops. Like last year, the Fed released a report like their annual report, and they were kind of forecasting what they might do with their balance sheet. And they kind of eventually saw that they're probably going to bottom in their treasury holdings and eventually start going up. Whereas they plan to continue to divest from their mortgage-backed securities over time through maturation. Um, and so that's like a market pressure that, I mean, if markets are very forward looking, that's certainly one really big entity that they're kind of paying attention to and say, well, maybe it makes sense to have a bigger spread between MBS and treasuries if the Fed's
Yeah.
going to start treating MBS and treasuries significantly different. And of course, there are many other factors involved, but you know, it's I don't really view like catastrophic mortgage risk in that market. I don't really view as like super risky, but I do think it's an interesting spread, and that's probably my best guess, or at least as a contributing variable for why that might be. One of the benefits of Bitcoin, like gold, is you can self-custody it. So instead of having like an entity hold it for you, you can self-custody it. Um, and what kind of security or hardware device you should have, or how many, would really depend on how many Bitcoins you're storing. If someone's holding $1 million worth of Bitcoin or $10 million worth of Bitcoin, that's different than someone who has, you know, $2,000 of Bitcoin kind of tucked away in a sock drawer, right? So there's a difference of variable. There's like some cheaper methods, like say tap signers. These are like NFC cards. They cost maybe, I don't know, off the top of my head, $20, $30. And they're like really great for kind of lower amounts of Bitcoin. And then as you get kind of higher, uh, some devices are $100 or $200, and those are kind of suitable for holding, you know, more substantial amounts of
Yeah.
Bitcoin.